Happy Wednesday. What's going on, guys? It's Ricky with TechBud Solutions. Just want to jump right into it. So as many of you guys have seen today, we live streamed the FOMC rate decision where the Federal Reserve officially cut by 25 basis points. There were 9 votes for cutting 25 basis points, 2 votes votes against cutting, and 1 vote cutting 50 basis point. The outlook for Fed is suggesting that 1 more 25 basis point rate cut in 2026 and 1 more in 2027. At least my interpretation about what Jerome Powell stated today. Nothing about 2026 looks bullish when it comes down to cutting rates. They believe that they've cut rates enough to pause, wait for markets to react, and to see if inflation continues to rise and if the labor market continues to get weaker, which is their 2 specific concerns and mandates. Now, this is an overall summary. The Federal Reserve cut rates by 25 basis points in the 3rd rate cut of 2025. The Fed will consider extent and timing of additional adjustments. Fed will begin purchasing U.S. Treasury bills on December 12th. Fed will buy $40 billion of U.S. Treasury bills in the next 30 days, or in 30 days, my apologies. FOMC member, Schmid and Goolsbee dissent in favor of no change. So the part that I like about that is that they were in favor of not cutting rates further. And those members are set to stay even when Jerome Powell fulfills his term after the first quarter of 2026. Fed signals rate cuts may be done for now. Fed Chair Powell may be halting rate cuts once again. Now, you wouldn't have assumed this based off of how the markets reacted. And what did we say in today's live stream? Again, the Federal Reserve did cut rates. That is a win for the bulls. Let them have their win. I mean, it made sense on why it pumped, but then it continued to try to push, pretending like what Jerome Powell was saying was bullish. There was nothing bullish about what Jerome Powell said for 2026. He clearly listed that the only reason that inflation has really been rising is because of Trump's tariffs, because of the sectors and the areas that, especially goods, that Trump's tariffs have impacted. Now, again, that's not just to point the finger. We all know it, right? Like, that is the biggest issue and the biggest concern for consumers. It's not the unemployment rate. Jerome Powell made it very clear that, yes, we do have a weaker labor market, but also there are less people that are technically applying for jobs. Maybe a lot of it has to do with deportation, but nonetheless, there are less people in the job market, but yes, there are less jobs available. The biggest concern for Americans has always been inflation. The consumer, the average consumer, does not want to pay more at the grocery store, right? Especially for goods. A lot of these goods in which that are imported. And that was what Jerome Powell made very clear that they understood. And even a series of analysts asked those questions of like, why have you been so fixated on the labor market when you know cutting rates really isn't going to do much in comparison to at the risk of possibly causing inflation to go up when cutting rates? Because for those that do not know, when you cut rates, right, and you try to stimulate the economy, you cause inflation. It's inflationary to cut rates. That is why it was kind of a pickle, because, well, you want to cut rates possibly to strengthen the labor market, but by cutting rates, you also possibly worsen the inflation rate. It can begin to go up. That was my biggest takeaway. With that being said, markets wanted to react in a positive way. I sent a little announcement to my LPP team shortly after, and I was like, let it pump. We all know that what Jerome Powell said today was not good. This is the moment that we've been waiting for. And as markets curled on over and began to retrace, I added more to my MSTZ position, which is an inverse ETF. It's pretty much like shorting MSTR. So MSTZ goes up twice as much as it does the opposite of what MSTR does. So when MSTR drops, MSTZ goes up, but it's a 2x leverage. I don't recommend it for beginners. It's not meant for beginners, but I like to share my ideas, especially with my LPP team that get to watch me trade live every day. I shared with them my plan when the reversal began to form. I knew that we were going to run out of time into the close, but based off of the overbought setup, I mean, look at it. It was just the perfect setup. Markets pumped up, went back to retest same previous highs that we were at yesterday, and just for a perfect setup of this thing to retrace and end up getting rejected. The funny part was that as Bitcoin pushed up MSTR still didn't push up, just to show how weak it was. I mean, it rallied a little bit, but it stayed red the entire time. Formed an overbought reversal. I wish MSTR pushed up a little bit higher because it would have given me more margin to work with for it to sell off. It just shows how weak MicroStrategy is. And remember, this is during a bull market that these assets, speculative assets, are falling apart. Imagine how terrible they're going to trade during bear markets. I made $7,200 going long on an inverse ETF of MSTR. Absolutely beautiful, right? Making money as markets retraced without having to short. For those that don't like to short, overbought reversal, began to retrace. What goes up if you don't like to short? Instead of QQQ, it's SQQQ, which is the inverse ETF, not an investment vehicle. It's a triple leverage ETF that goes up when NASDAQ markets go down. Or I believe for the one for S&P 500, the inverse ETF as SPXS is one of them. So as markets, again, end up selling off during the extended hours, SPXS ends up going up. So it's a really cool way to be able to gain a little bit of money while overall markets retrace, especially if you don't like shorting. I just loved it. I thought it was like so beautiful. The bulls thought that they had it all figured out. And again, don't get me wrong. They did cut rates. That's what the market wanted. But this is kind of like the setup of the buy the rumor, sell the news. The market's been recovering based off of the expectation that the Federal Reserve was going to cut rates, right? The Fed rate monitor tool, everyone knew that the Federal Reserve was highly likely to cut rates. But now with what Jerome Powell said, it wasn't an assumption, and it's not what we're thinking about. He made it very clear. One rate cut in 2026, which can change, right? According to economic data, he's made that very clear. But it was definitely not a bullish FOMC press conference. And that's what I loved most because it solidifies the uncertainty of the overall market and that the Federal Reserve has when it comes down to our rising inflation rate and also our weaker labor market. So overbought reversal forming with huge downside. I am so excited to follow up because again, although I do like shorting and making money as these stocks sell off, I want markets to crash because I want to pick up some good deals on some of the long-term holdings that I have. I own a lot of NVIDIA. I own a lot of Tesla. I own a lot of Meta and UNH, and I would love to buy more at more cheaper levels. And again, I like money. I like making money shorting, but I also like to invest in companies when they're not incredibly overvalued. And I think that we can mostly agree, except for those that are bag holding, that markets are due for a nice retracement as all the red flags are present, right? So we'll see how the markets trade tomorrow. Again, I want to remind you, I do trade live every single morning right at market open. Whenever you're ready to tune on in, you can watch me trade live as soon as tomorrow. And that's that second link in the description down below. You get to see every entry and every exit that I take within that live session. And then you get all of my trade updates. It's a one-time payment for lifetime access. We have members that signed up back in 2018 that still watch me trade live every day when the market's open. So if you want to check it out, we have a big discount for you. Second link in the description down below. Like always, let's make sure that we end the year on a green note. Take care, team, and happy Wednesday.